Hey guys, Mike here. So, happy New Year. Hope everybody had a great New Year's. I know I did. I'll definitely have to tell you about a conversation I had over New Year's with a guy who's been in like finance his whole adult life, which has been a long time. And so it was a good one, but we had a great time. Hope you did as well. Hope it's going to be a great year for everybody. And we're going to get into some stuff for sure in this one to really kind of set up what's going on, because it's been a volatile week. I am going to ask you for a favor in this video. If you could help me out with something, I really would appreciate it. And of course, we'll go into one thing that probably ruined a lot of people's New Year's, man. I don't know if it did yours, but it was some bad news that came out on the 31st. The person just couldn't help themselves by putting this out. We'll also look at some stuff going on in the market, because remember, there's the market, and then there's the market. What's the market? The market's, most of it's 8 stocks. I'll show you what I'm talking about. But again, I also want to set the record straight on the yield curve and make sure I did not mislead people in a Saturday video I put out. I thought I said it the right way. Maybe I didn't say it the right way, but something to do with the 10-year yield when it comes to the yield curve. I want you to be very aware of that. But I did want to start off with this right here, and I'm sorry if it ruined your New Year's. But Jim Cramer, he couldn't wait. Had to come out yesterday and say, I'm very bullish on 2025, probably the best year that we will have in decades. Happy New Year, everyone. And I think a lot of people probably spit up their drinks and went to bed crying last night, and the comments were hilarious. I'm joking, of course. But man, did you see this right here, by the way? This Tesla exploding in front of the hotel. It was a Tesla truck. It was yesterday, and you can see it on fire right there after the explosion. I mean, that is unbelievable. And thank God nobody was around it. I hope nobody was in it. I don't think they were. I think they were just parked there. But man, what an explosion that was. And we'll get deliveries for Tesla tomorrow, by the way. Now, looking at some things here, you can see monthly market breadth is on pace to hit an all-time low in December. I've been keeping you guys up to date on this. Percentage of stocks outperforming the S&P 500. And you can see it's like 17% or something like that. That's the stocks within it trying to outperform the S&P. I think it was, what, 23, 24% this year. And so, boy, that's not good. I mean, that goes back to 86. So no surprise, because, I mean, we talked about breadth. The breadth it's horrific, but it's such an educational thing, right? To look at this. I remember I said for 2 or 3 years now, I said it's hard to bring down a market as long as you got so much concentration, right? And you can see S&P 500% of stocks above 50 moving average. It's going to be lower than this. That was 19% that morning. We were red on Friday in the S&P, so it's probably 16%. Only half of them are above the 200 moving average. Right now, the Q's about half. That's probably less now because of the red we had on Friday with those two. And so when you look over here, I mean, clearly, because of the weighting system, obviously the big boys, here's your big ones, Google and Meta. And, Netflix had a great year. Tesla, of course, Amazon, Microsoft. Look at Microsoft. Microsoft was actually such a slacker, wasn't it? I mean, Apple almost 3 times what it did. Palantir joined, 340%. BKNG, excuse me. Cost was a good one. TMUS, FTNT. So you have some good ones, but those don't hold hardly any weight in the QQQ, because those big boys you see up there, I think it's like 47% now. Top 8 stocks, I believe it is. It keeps getting bigger and bigger. Matter of fact, I believe, if I'm not mistaken, I showed you the other day, it's like the largest amount of concentration by a country mile we've ever seen on the S&P 500 and the QQQ. And so as long as these puppies continue to go, the market's at least going to hold up, to say the least. These have to fold in order to get that really big pullback. And speaking of the spot, you can see the chart. It's ugly. You can see 584 is the key. That's where we stopped again. That's 2 days in a row. But I want to talk about this gap for just a second here. It's the election gap. It's a lot of attention. And when you look on the extended trading hours, it came down between 4 a.m. and 8 a.m. a lot lower than what it looks like on regular trading hours, right? So a lot of this gap has filled. You just can't see it on regular hours, and we've seen this before. I'm actually going to pull this down to right here. I just want to see if we are actually going to finally get this gap filled. And of course, there's a reason for that, which I'll show you. You'd love to see it behind us, but really that's what you've seen, right? Remember I showed you on Tesla where this happens, where stuff will happen in pre-market or NVIDIA, and then you get this bounce. You can't figure out why you got this violent bounce, right? But what's really interesting, and I talked to members and talked to people I trust, ES, which is the futures of the S&P, it did fill the election gap, but it's not considered, to trump the SPX or SPY for that matter. So just because it filled the gap doesn't really mean a whole lot or have a whole lot of weight to it. But the thing was, what caught me was the violent move up. You go back to SPY, this ain't the Qs, this is the SPY, right? It has oil sectors and all this other stuff. And, almost 4% in 6 days is a very violent move up. I mean, that was a big move up. And because of that big move up, that's why I started looking into it. Because one of you guys down in the comments, like I said, I read all of them, or say, hey, man, I think this gap's already filled. I think your charts are wrong. And I did want to ask you guys a favor, which was, please tell me, go look in your chart and then let me know in the comments if the gap is filled on your chart. Because just because I use TradingView don't mean they're the end all be all, right? We've seen this before, and if you use some other site or something, maybe they're off. And so look at yours, tell me where that elation gap filled in the comments and which site you're using, and if on your chart it's filled. Because on one of the gentlemen I was talking to in the comments, he said it filled on his, and so that can happen. So I just want to know, and that way I can bring it to you guys, because if that gap's filled, that actually is a big deal, because that was a big gap. That's where we really pushed up. A lot of people want to see if this gap gets filled and all that stuff, and so I just really want to know. So I'd appreciate your help on that one. But obviously, when you look over at IWM, this one was actually green on Tuesday. But boy, they are really holding it up in this area, right? And we've seen this before in the past. We'll pull this over. So that is still that demand area right now. It's coming down there and it keeps bouncing. They keep holding it up in that area, as you can see. And so clearly, if that area breaks, then yeah, you're looking at like 213.86, 214, somewhere there on the horizon for this one. But when you look at it, what it's going to be battling through. Again, we're sitting here at the golden pocket in a discount range. We're sitting here in this demand zone, but it is below a lot of stuff, man, a lot of stuff. And so when we start pulling a moving average on this thing, we're going to pull up the 200, the 100, the 50, and we're going to pull up the 20-week just for giggles right here and let you see what this was up against. And, I know Tom Lee's there saying it's underperformed. It hadn't underperformed as much as like .com bubble and all that stuff, and I agree with that. But again, this one doesn't go unless all those quantum computing stocks and flying taxis and all that crazy mess start having really more short squeezes, it seems like. But when you look at it, you can see it's below the moving averages. You can see it's below the 20-week moving average now as well. And so it's going to have a lot to get through. And that anchor VWAP from FOMC, I mean, it's like a brick wall for this thing. It cannot stay above it. It cannot get a full candle close above it. And so, until you get that, you can forget about it. I mean, if it gets above it, obviously 226 is going to be on the cards. If it gets through all those moving average and everything else, wonderful. But you can see it gets this formation. It might stay there a little while, right? Where you start to see this consolidation. That was a big drop. The other consolidation was a big move up. And it's usually a catalyst for this. And so what's that catalyst going to be? Is it going to be earnings when we start rolling out earnings again? Is it going to be the yields start to drop off a cliff? Because they were dropping hard over the last few days. And so maybe that's the case, which I'm going to talk about right now. And I want to make sure I'm clear about this. We talked about in Saturday's video, this is the yield curve, right? It's the 10-year, 2-year. You can see it's uninverted. And then when we go over, you see this is the 10-year, 3-month. And I want to make sure I'm very clear and did not misspeak in one of the Saturday videos. Just because it's uninverted does not mean, and this is going up, does not mean the 10-year cannot come down. The 10-year will just outpace the 3-month and 2-year. As long as it's ahead above that, it will keep uninverting. But as you can see right here, this is uninversion, right? From was it August 2007 up to like October 2008. And when you come over to the 10-year, what was happening during that same time frame? It was going down. Okay, this is why TLT performs really well during a recession, not a crash, a recession. Okay, so the 10-year can come down. Clearly, it's just not happening right now during when something's uninverted. So don't make sure I didn't misconstrue that or nobody misunderstood me. And I did add this trend line here for you guys to show you where we reject that. So you had horizontal resistance, you had some trend line resistance right here, and so far it has sold back down a little bit and cooled off. But to me, maybe it is inflation, but really what the bond market's saying to us more than anything else, because is that, hey, we need more bang for our buck. If you want us to buy a 10-year and 30-year debt, we need to get more for this. And so I think that's why you're seeing these go to the moon, because it is more risky. I know I would say we're the cleanest turd in the toilet, but I showed you the other day, I mean, we're literally passing, the national defense spending right now, and we're going to pass Social Security as the most expensive debt when it comes to interest, okay? Doesn't mean we're infallible or anything else. It's just that I say, hey, if you want us to buy your debt, here's what we need. Like, here's the demand, and so far, yields are going up. Maybe it's got to do with inflation as well. We'll see. But this kind of leads into what I want to see this new administration, which is coming in this month and in a couple of weeks here. They're going to get sworn in and come in. One, what are you going to do to handle this? Because there's trillions that are going to have to be issued again, refinanced, all that fun stuff. And at these rates, I mean, my goodness, those, that's, I don't know how anybody's going to sit here and say, oh, yeah, not a problem. Yeah, it's a problem. Okay, it's a big problem, and it's adding up to be one. So I want to see how they handle that. I want to see what this efficiency stuff's all about. Right? They really gonna start cutting people, and as you can see, it ain't so much about the federal government. I showed you the employment. They're talking about cutting people. Well, where it needs to be cut at is the state and local levels. That's where it needs to be cut at. So if the federal government cuts out the money that's funding all that, sure, there you go. And that's because they'll show you the state and local levels. We haven't seen it this high since the .com bubble. Okay, because the private sector, what are they doing? They're laying off. They're like, forget this. We ain't seen it that low since, we've never had it this low when there's not a recession, right? Now, so I want to see how they're going to handle that. How are tariffs going to come into play? We're just using it as a way to get other countries to do what we want them to do, or we actually going to start, putting them into full effect and really putting 20%, 50% type tariffs on stuff. That's what we got to find out. It is a lot of uncertainty, right? But again, that's not the stock market. We've seen the stock market, and what you're looking at more than anything else is the equal weight ETFs. Watch those closely in January. Watch the RSP, watch the QQEW, see if they finally start to participate, okay, because those are equally weighted. And then just watch your MAG 8 or MAG 7, which one you want to do. But I add an AVGO as well to see, because I said it 2 years ago and people got upset, but you cannot have a market crash unless those participate, because they make up almost half the market. Okay, that's just simply the way it is. And so, and especially, you'll have 3 moving down while 4 or 5 are moving up, and so it's a wash, right? So that's the big problem. And so you can have all these other stocks going down, but if you ain't got no weight, it don't really matter that much. You need those to fall first. And the other thing I want to look at in 2025 is AI, automation, all this other stuff, right? Well, who's going to have that more than the other? Your MAG 7, especially your Teslas, your Googles, your Microsoft, your Apples, all those are going to be benefit from that more than anything else, or have it more than anything else. So what's going to cause them to be able to do? Crush their competition even more, because now they'll be able to innovate even faster. If you thought they were a monopoly the last couple of years, just wait, because they can afford all this stuff. Do you think regular companies can afford to keep up with them on this? No. So they're either going to start buying out companies or just crush them even more, and they're going to gain even more market share and stuff. And so that's something I want to see as well. And like I said, I showed you the other day, you look at all the top funds, like what's number 1? It's Apple. But you look at all the rest of them, what's top 10? All of those. And so every time that 401k contribution, your IRA, because people are going to start front running. Remember, you can contribute to your IRAs today, right? Going forward, what is it, 7,000 or 7,500 now? I hadn't looked yet, but that's going to start flowing into the market right now. What else has happened? Now that the Fed's cutting rates, what are you getting emails about? Your savings accounts, your money markets, all that stuff. So now people are going from 5-6%, 4%, 3.75% is what's going to start happening this year. That could have money shifting. Where's it going to shift to? 10-year, 30-year bonds. It's going to shift. Some people are going to try to go into TLT. The stock market, they're going to say, I'll just go into the stock market. I'll start buying the SPY again, or the QQQ. What happens when you do that? That money starts flowing into those top stocks again. So that's something else to watch out for as well when we see this. So, again, and just watch the 10-year yield, see what it starts to do. So I know it's a lot of stuff, by the way. And again, now when you're looking at data real quick, I almost forgot about this. We do have some big data coming out tomorrow. You see it's been very volatile days even without the data. But you got unemployment claims, final manufacturing PMI, construction spending, and crude oil inventory. So again, that's definitely going to cause even more volatility. But anyway, I want to put those out there just in case to get the more started for you. So I hope you got something out of it. Please hit the like, subscribe button if you did. Think about signing up for the membership. Less than McDonald's combo, and that's everything you get with it right there. So I hope you guys have a good one, and hope is a great 2025 for everyone. See you later.